Everyone told me this wouldn't work until it did. They told me you can't make money consistently trading options. They told me you'll have a few good months, then you'll give it all back. They told me weekly income in the stock market was a fantasy. And honestly, for a long time, they were right. But not because the strategy doesn't work. It's because most people are focused on the wrong thing. So in this video, I'm going to show you how you can generate realized gains every week using options. Not paper profits, not unrealized swings, actual money that hits your account every single week. And I'm going to walk you through a real example, step by step, using my Thinkorswim platform. So if you're brand new, you're going to understand exactly how this works. Now stay until the end because I'm going to explain to you how I structure this so I don't panic when the stock drops, and how I help newer traders avoid the kinds of mistakes that literally cost me thousands of dollars early on. Now let me be super clear up front. This is not about getting rich overnight. This is not any YOLO trading either. And definitely not chasing home runs. This is about stacking consistent, repeatable wins. If you've ever looked at your account and thought, I was up, but now it's gone. Why do my gains never feel real? Why does everyone online make it so easy? Then this video is for you. Now here's the core problem. Most traders lose money because they're obsessed with unrealized gains. Unrealized gains are paper profits, temporary, emotional, and they disappear fast when the market turns. I mean, here's how it works. You buy a stock, it goes up, you feel great. Then it drops, and then you're sad about the profit that never even existed. So here's what changed everything for me early on. Shifting my focus to realized gains. Realized gains are money that you lock in. Cash that shows up in your account, cash that you can actually withdraw and spend, and cash that does not vanish overnight. Now here's the part that a lot of people don't even understand. You don't even need margin to do this. In fact, this works best when you don't use margin. When you sell cash secured puts and keep cash on the side, something powerful happens both psychologically and mathematically. Okay, let's say you sell a put and you get assigned, and then the stock drops after you buy it. On paper, you're down. But that loss is unrealized. As long as you don't sell your shares for less than what you paid, and you still like the company, and you kept cash available, you have not lost a single dollar. And instead of panicking, you can now sell another put with a lower strike price. And if you have to buy those shares, you're averaging your costs down. So the stock going down does not break your strategy. It actually feeds it. Most people just can't see this. So here's the key points that you want to keep in mind. Unrealized losses do not matter. What does matter is stacking income from week to week. And here's the key takeaway. You only lose money if you sell your stock for less than what you paid. Don't do that. That small mind shift will change everything for you. And you go from thinking, man, I hope this stock goes up, to, I don't care where the stock goes. I'm going to get paid either way. You're selling a put on a stock that you're happy to own anyway at a price you already like. So if the stock stays above your price, you keep the premium. If the stock goes down, you buy the stock you wanted at a discount and you still keep the premium. That's it. No predictions, no guessing tops or bottoms, and no stress watching every tick. Now, I'm going to walk through a real example with you using my platform on Thinkorswim. Now, before we jump right in, do me a favor, if you're not already subscribed, hit the subscribe button in your bottom right. I'm putting up a video every day talking all about how to help you create more income for yourself. And subscribing helps other people see these videos too. So thanks for that. Now let's jump right in. So I'm going to walk through a real live example on my platform, and I'm going to use SOFI. Now there's two big reasons why I like SOFI for this strategy. Number one, it's a fintech company with a legit growth story. They're not some low-cost meme stock. It's a real business with expanding revenue streams focused on digital banking, lending, and financial services. Now that matters because if you do end up owning the stock, you want something with long-term potential. And the price of SOFI makes it super accessible to all kinds of traders. Right now, it's trading around $26 per share. That means smaller accounts can participate, bigger accounts can scale, and you're not tying up massive capital like with $300 to $400 stocks. And just as important, implied volatility is in the sweet spot. Not so low that you're underpaid and not so high that it's a ticking time bomb. That's exactly what we want as option sellers. Typically, I always look at a 1-week expiration. First of all, I want to create myself income every single week. And secondly, I don't want to tie up my capital for long periods of time. Now, I usually use a fairly low delta. I'm going to show a delta of 24 in this example, as we can see here. Delta is like the cheat sheet way to tell you statistically how likely the stock is to end in the money at expiration. So for example, this $25 put that expires January 23rd, that has a delta of 24, it's like saying this. It's 24% likely that the stock will close below $25 when it expires on January 23rd, requiring you to purchase those shares. So it helps you understand like a margin of safety for having to buy shares or not having to buy shares. Now this example is the strike price of 25 and it last traded at 24 cents, meaning $24 gets dropped into your account right when you make the trade. And your obligation is to buy SOFI at $25, but only if it drops below $25 by the time the contract expires on January 23rd. Now here's the part that most people miss. $24 on $2,500 of capital is literally just under 1% for 1 week's time. Now that doesn't sound exciting until you realize this. When you annualize that out, you are literally making over 50% per year on your money. And guess what? If SOFI stays above $25, I'm done. I book the realized gain and I move on to the next week. If the stock does drop below $25 and you have to buy the shares, well, that's where most people panic. But actually, that's where opportunity shows up. If SOFI drops and I get assigned, I now own the stock. All you do is switch to selling covered calls after. That lets you collect more premium while you own the stock. And then if the stock drops even lower and you still like the company, you sell another put. So you see, it's not just putting one trade in. This turns one trade into a cycle, not a loss. Now here is something I wish somebody told me early on. Always keep cash on the side. Why? Because stocks don't move in straight lines. Cash allows you to avoid panic, avoid emotional selling, and stick to your plan. Cash gives you control, and control is what keeps you in the game. So what'd you guys think of that content, huh? People don't fail because options don't work. They fail because they're trading stocks that they really don't understand. They chase premium without having a plan. They oversize their positions, and they don't know what to do after they get assigned. I know because I made all those same mistakes, and they cost me way more than I care to admit. Now that's exactly why I created this new event that I'm rolling out in February. Here's what it is. Live sessions 3 days a week, every Monday, Wednesday, Friday. We walk through real trades together, not just hypothetical trades, but the trades that you're looking at and you're doing in your account. I explain the why, I help you put the trades together, and then I help you manage them for the entire month. Now there's only 20 spots and the price is $497. And honestly, that's a fraction of what I lost learning the hard way. So if you've ever thought, man, I just wish I had someone to help walk me through it in real time, then this program is for you. Check the link below before spots fill up. Because yes, consistent weekly income is totally possible. You just have to stop doing what everybody else is doing.